Hey all, welcome back again to the channel of Investment Advisors. As part of Market Vision series, in this video we will discuss how the global markets have performed last Friday and what is expected in Indian markets on Monday given the India and Pakistan clashes and firing across the line of control. Indian markets faced heavy selling pressure on Friday with Nifty and Sensex plunging sharply before a slight recovery. Nifty crashed 207 points, around 0.86%, closing just above the previous resistance levels of 23,800. Sensex as well nosedived 588 points, around 0.74%, ending tad above 79,200 levels. Despite strong global cues, continuous inflows from the FIIs, we saw selling pressure due to escalations in Jammu and Kashmir, India because of terrorism. On broader markets, most sectors bleed, except IT, which stood strong. Worst hit sectors were media, which crushed 3.24%, as there was selling pressure seen in entertainment and broadcasting stocks. Realty sector was also down by 2.8% due to weak demand despite the low interest rates. Pharma stocks as well drifted 2.24% due to profit booking after the recent rally. FMCG stocks too fell 0.62% due to slow rural demand concerns. The only gainer was IT, which jumped 0.72% due to weak rupee and strong earnings hopes that boosted the tech stocks. Global markets were green everywhere. While India struggled, US tech and European stocks gained. On the US market side, Nasdaq surged 1.26%, and this was primarily led by AI and tech stocks, which rallied hugely. S&P 500 on the other hand was up 0.74%, whereas Dow Jones remained flat because of mixed corporate earnings. On European markets, Germany's DAX climbed 0.81%, France CAC gained 0.45%, whereas UK's FTSE remained flat because of inflation worries that capped the gains. On Asian markets, Japan's Nikkei jumped 1.9% due to weak yen that boosted the exporters. Hang Seng was also up 0.32%, whereas Shanghai remained flat due to economic concerns that lingered. On commodities, gold and silver had shined. There was a good demand that boosted the precious metals, and even oil inched higher. WTI crude oil surged 0.37% and closed at $63.02 per barrel. Gold on the MCX had been trading near the all-time highs and closed at 99,265 rupees per 10 grams. Silver on the other hand jumped towards 1,12,000 rupees per kg due to industrial and investment demand. Now let's discuss from the perspective of charts as well as open interest to understand how the market is expected to open on Monday and then how on Monday it is expected to trade. So we are in the Nifty 50 chart. So as you could see that on last Thursday we had discussed that markets are going to trade in the range bound. So this is what is the range that we had discussed. And in fact on Friday we clearly told if this levels it goes below, then we will see immediate selling pressure coming in. Similarly, if the markets is expected to move higher above these levels, then it will surely spike on the upper end. So since there was already escalations and tensions between India and Pak war, that is when we suddenly drifted down, and the sell-off was towards the previous resistance level. So this is what was our previous resistance level. So you could see here the Nifty index touched towards those levels, and from there it bounced back slightly and closed somewhere around 24,040 odd levels. Now this is again closed at a weaker level, so we might expect further downfall to continue from here on for until next week, till all the escalations and war related issues subside. So till then we might not be inching or moving above 24,400 odd levels. So this is expected to remain a crucial zone until all these tensions or issues on war subsides. So the moment Nifty starts moving above this level, so this should remain our tight stop loss and we should immediately go long. So we might see sudden spikes coming in future, crossing even above 24,800 odd levels. So it is just a matter of the news and how maybe this war is going to get a shape. So until markets trade in this range, we do not have a worry. The moment the market starts trading below this level, be prepared for maybe at least 4 to 5% drawdown from here. So 23,800 levels is expected to remain crucial on the lower end, and on the higher side we have to closely track 24,024 odd levels. So once Nifty starts moving above these levels, then we will see sharp rally coming in on the upper side, which can even hit 24,800 to 25,000 odd levels, and then from there we can see the high rallies coming in. Now let's move on to open interest. So on Friday, since there was some escalation and tensions because of the firing and clashes between India and Pakistan, we saw a good selling pressure that had come in. Due to that, there was a huge built up in the open interest across the strikes on the call side. So this suggests that we are capped for the moment for the higher side. So 24,500 odd levels remains quite crucial as resistance. So as long as Nifty trades below 24,500 odd levels, we need not to worry. There are very low chances or expectations until April 30th we might move towards these levels. So that is when we could see roughly 60% of open interest positions here, around 40 to 50% of open interest positions had been built. So at every 100 level strike, you could see that there have been good sellers who have built up their positions, expecting that the markets may not move on the upper side. Rather, there would be a lot of selling pressure due to the kind of critical news that is around. So there is expected that India would also retaliate. So in this retaliation, there would be more chances of war type of scenario that is expected to get escalated. So if such kind of scenario happens, then we would soon see sharp sell off coming in, and we might start even closing below 24,000 odd levels. So 24,000 level again remains crucial. The next immediate support is 23,000 levels itself. So since there is no support that is coming in between, so we might see immediate sell off that might lead to 23,000 odd levels too, once 23,500 is taken down. So since we had already touched around 23,000 800 odd levels and recovered swiftly from there and closed around 24,040 odd levels, so there are high possibilities that if the tensions escalate again, the next week itself we might suddenly seeing the crash coming in Nifty, and we might close even below 23,500 odd levels. So the immediate support is at 24,000. The next support comes at round figure 23,500, and the last support is at 23,000 odd levels. On PCR front, it is 0.7 overall and 0.63. So this is neutral to maybe bearish, I would say, given the kind of news that is getting circulated. Moving on to Sensex. So even Sensex touched towards those levels of, previous levels of resistance, around 78,800 odd levels or 500 odd levels. And then from there, we, recovered roughly around 40% of the overall fall and closed around 79,200 odd levels. So it is a clear indication now, and even on Friday we discussed this, that this zone remains critical for Sensex. So if Sensex moves beyond 80,200 odd levels, then we might soon see the higher highs coming in. And we had also very clearly discussed that as long as Sensex is trading in this range, we might have a range bound kind of scenario. The moment it crosses this level on the lower end, then we might see a sudden selling pressure that is expected to come in. And the same thing had happened. In fact, on Friday we immediately saw the swift selling that had come up, and then towards mid of the day, there was a recovery that had come in, and then we closed maybe at the 60%, sorry, 40% of the retracement of the overall fall. So even over the weekend, there have been some clashes and firing that continued on both the sides. So that might add to some negative pressure at least on Monday. So be ready for the markets to maybe start drifting lower, and then we might see more escalations or pain coming in if there is a overall firing as well as scenario which turns into a war. So till then, we are expected to trade in the range bound scenario of this, and then from there, be ready once it closes below 78,800 odd levels. We will soon start seeing a big downfall coming in on Sensex. And on the higher side, we have to closely watch 80,200 to 400 odd levels. Beyond that, if it moves, we have to cut all our short positions and move for longer positions, because Sensex might swiftly move higher towards 82,000 odd levels once we see good buying that emerges at the higher levels. Now from the perspective of open interest, so 29th April Tuesday is going to be the expiry for Sensex. So here, if you could see on the put writers, they have taken down their positions, and we could see a lot of selling pressure that got added. So on the call side, there have been good open interest positions that were built at 80,000 levels, because from this level itself we started seeing that downfall coming in. So that is when we have good open interest positions that were built here, and at every 500 odd levels, at 80,500, 81,000 and 81,500, we see significant call writers who had emerged in anticipation that because there is a negative news that is flowing in, so markets are not expected to cross 80,000 odd levels. That is when we saw huge selling pressure or the open interest positions that had been built at the higher levels on the call side. So this very clearly tells us that Sensex is not going to move beyond 80,000 levels at least until 29th April expiry. So this 79,000 levels is going to remain crucial, and below that level we have support at 78,500. I think on Friday we touched these levels, and from here we immediately bounced back and closed until 79,200 odd levels. So the last support again is going to emerge at 78,000 odd levels. So if market trades in range bound, we might close on the 29th April expiry in between of 78,000 odd levels until 79,600 odd levels. So this is the range we might close for the 29th April weekly expiry for Sensex. So on the long side, because the kind of news that is getting circulated, it is difficult for Sensex to move upwards, provided if the issues and tensions subside, and then there is a strong buying that comes in from the institutions. So until then we have to trade cautiously. On PCR front, overall it is zero point 0.6, and at the money it is 0.64. So this says that we are in the bearish zone and might expect Sensex to trade either range bound or close somewhere towards or inch or move towards 78,000 odd levels on the downside. Nifty Bank, in fact, was quite negative on last Friday. So that is when we had seen a good selling pressure that had come up. So uh, Bank Nifty now is in a weaker zone. So the previous resistance is what it touched on Friday, and then there was some recovery that was seen, roughly around 40% recovery that was seen, and it closed at 54,660 odd levels. So now, as long as 54,000 odd levels is sustained, then we might trade in a range bound kind of scenario. If Bank Nifty drifts before below 54,000 odd levels, then we might soon see good selling pressure that is expected to come in, and we might start trading in this range around 52,500 odd levels. So this entire rise would be easily sold off in just 2 to 3 trading sessions if there is more escalations between India and Pakistan, and that ultimately can turn out in a war kind of scenario. So as long as Bank Nifty sustains 54,000 odd levels, there is nothing much to worry. But there is no point in taking any of the long positions. In fact, you can sell positions or um, sell call options for 56,000 odd levels. The moment 50% of the points are recovered in this range of 54,000 to 56,000 odd levels, then we might cut off the 56,000 call option positions. So overall, there is no point in taking long positions. Rather, we can take calls for the higher strikes, 56,000 and above strikes, so that whenever any positive news comes in, we can cut off the long positions and start trading in the range bound kind of scenario between 56,000 levels to 54,000 levels. So once 54,000 on the lower end is broken, then we might see a swift downfall coming in, which might take Bank Nifty towards 52,500 odd levels. So let's be cautious. Now, from the perspective of open interest, at every 500 points, we see both calls as well as puts. So on the higher side, we see more open interest positions are built up on the call side, suggesting that at every higher level there is a strong resistance that is expected to be seen. Similarly, at the lower levels, we see good open interest positions on all the put side. So that very evidently says that at all the lower levels there is going to be good support that is expected to come from the put writers. So at every 500 levels we see strong support that has emerged from the put writing, so which might be difficult for Bank Nifty to soon drift down in one single go. So overall, yes, we have to be cautious on the long side, but yes, there emerges a strong, support at the lower levels at 53,000 odd, suggesting that at least, in the initial stage of 1 to 2 weeks, we might not see a Bank Nifty falling below 53,000 odd levels. So let's see how maybe the market is expected to trade on Monday and the overall week. So on PCR front, it is quite positive overall at 1, and at the money again it is 1.03, which again remains quite positive. But yes, since it is just the start of the May month series, so we cannot decisively come to the conclusion that where the market is headed, but it is very evident that there is a restriction that is going to come in beyond 55,500 odd levels in the initial stage, and then later 56,000 odd levels. So markets will trade in this range in the initial stage until the news from India and Pakistan maybe subsides. Post that we might see Bank Nifty moving towards higher levels, but until then 53,000 remains the strong support for us. Lastly, on the FinNifty, on FinNifty as well, because of this strong rally, we saw a good selling pressure that had emerged. So on Friday as well, as you could see, there is a big candle which has been like a bearish engulfing kind of candle, which very evidently suggests that there is a negative uh, news on the financial stocks that has come in already. And if FinNifty starts trading above 26,050 odd levels on Monday, then maybe we might see some upside coming in. If it trades in the same range of 25,500 to 26,000 odd levels, then it is very evident that there is no point in taking the long positions. Rather, it might start trading below these levels to 25,500 odd levels to shortly, and then we might see the market taking support somewhere at 25,000 to 25,200 odd levels. So this would be the immediate support for FinNifty, and below that support maybe we will have support coming in at 23,500 odd levels, because this is the zone where from we started seeing FinNifty moving towards the higher levels and making the 52-week high or the all-time highs. So the immediate support for FinNifty is 25,200 to 25,000 odd levels, which will act as a support, because this is the zone or the previous resistance from where we had inched higher. So this would act as the immediate support for FinNifty. And on Monday we have to be careful. If Nifty is not crossing above 25,050 odd levels, then there is no point in taking the long positions. Long positions should only be taken when we close above 26,500 odd levels. So once we start moving above 26,500, then we can again turn towards the longs and then start trading for the higher levels. Talking from the perspective of open interest, so 26,000 levels is where we have been seeing strong support that had emerged. On one single day, just one single day, we saw roughly around 70% of open interest positions that were built up towards at the money strike of 26,000. And this overall open interest position was seen alone on put side. So that very evidently says that put writers have written down a lot of positions at 26,000 levels, stating that they are going to hold or maybe buy more as the Nifty falls below 26,000 odd levels. So the immediate support that we have is 25,500, which is the round figure, and then later 25,000, which emerges as the strong support for Nifty at the lower levels. On the higher side, we see at 26,500 odd levels, there have been call writing that was there previously, and it continued. But at the same time, there have been open interest positions even on the put side that were already held. So there is some expectations that FinNifty might trade range bound if there is no bad news that comes in, and slightly may start moving towards higher levels. So the immediate resistance on the higher side that is expected to be there on FinNifty is at 27,000 odd levels, which is towards the all-time highs. So as long as the bad news that is surfacing us, so till then the markets are expected to trade at the lower levels, or maybe might at worst kind of scenarios consolidate. But on the long side, it is very difficult for the markets to move up. So as long as FinNifty is trading about 26,000 odd levels, it is okay. But the day it starts drifting below, it's good to taking the call sell call options, which will help you to make good profits. Overall, PCR it stands at 0.03, and at the money it is 1.27%. So as you could see, at any other strikes there are no positions that have been built up at all, at least on the put side. But on the call side, at higher levels we have some positions that have been built. So it's very evident that majority of the put call ratio is coming from uh, the one single strike, that is 26,000 odd levels. Talking from the perspective of FII and DII data. So on index futures, FIIs have been holding shorts with 35,226 contracts. On stock futures, they are long by 16.47 lakh contracts. On call options, again they are long by 36,163 contracts. On put options, also they are long by 6,359 contracts. So net on index options, FIIs have turned positive toward or longs, and are carrying 30,000 contracts. On proprietary trader side, they are short by 11,800 odd contracts on index futures. On stock futures, they are mildly long with 3.24 lakh contracts, and on call options, they are positive with 66,000 contracts, and on put options, they are again longs with 21,500 odd contracts. So net even proprietary traders are long with 45,000 odd contracts on index options. Now, from the perspective of client or retailers, they are short on index futures. They are long, massively long, in fact, on stock futures with 16.59 lakh contracts. On call options, they are short with 1.03 lakh contracts, and on put options, also they are short with 79,000 odd contracts. So net DIIs or maybe the client or retail traders are short by 24,000 odd contracts. So FIIs are long, and DIIs, sorry, proprietary traders are also long, whereas the client or retailers are short. On the other hand, let's see from the perspective of cash market. So DIIs on the cash market have been long with 3,540 crore positions or money that they traded with in the cash market. On the FII front, they have also been long with 2,952 crores investment in the cash market. So both FIIs as well as DIIs went long. DIIs have been shorting or maybe selling off and giving way for the FIIs for a very long time. And lastly, because of the sell-off that we had seen on Friday, could be DIIs would have immediately emerged as the buyers at the lower levels. So that is when we have been seeing this huge amount of investments that had happened in the cash markets. So net on the cash markets, both FIIs and DIIs are long. So we have to see how the market is expected to open. Though the Gift Nifty suggested positive opening for our markets on Monday. However, because of the weekend kind of news and escalations, which can turn out, to kind of war, so that had led some negativity, and which would also have some impact on the markets on Monday. So let's see where and how the market is expected to open. But yes, keep a note of the crucial levels. For Nifty, it is going to be 23,800 odd levels where we have to uh, go short below which below those levels. And for Sensex, as long as it trades above 78,500 odd levels, there is nothing much to worry. Below 78,500 odd levels, we will see selling pressure coming in again. That's it maybe for today's market update. So if you like our video and like our content and the overall analysis from our side, do like, share and subscribe to our channel. So if you have any questions or clarifications that are needed with regards to index or any stocks, you can comment below to this video so that we can answer to your queries. So thanks again. Until Monday.